Hello, everyone. Welcome to SPAC Chat. I'm Karen Snow, head of East Coast listings here at Nasdaq, and it's my great pleasure to be speaking with Scott Wagner, head of strategic capital and SPACs at TrueWind Capital. TrueWind's SPAC business is renowned for its successful business combination with Open Lending, widely considered a top 5 business combination, and more recently for Rover, which listed on Nasdaq in early August. In addition to that, TrueWind has an announced business combination in the works, an actively traded 4th SPAC, and 3 more SPACs on file. Scott, you are certainly busy. Congratulations and welcome.
Thanks, Karen. Well, yeah, the whole Truin team really has been super busy over the last 18 months, but thanks for having me. It's great to be with you.
Great. Well, why don't we start off by having you tell us a little bit about your background and how you ended up at TrueWind.
Great. Well, I'll take you back between 2000 and 2011. I was a partner at KKR, the big global private equity firm, where I did a lot of work in tech. And was one of the leaders of KKR's operating team, where I jump into companies and work on really enabling the value creation that the investment was based around. And in that case, I worked closely with TrueWind's 2 founding partners, who are Adam Clammer and Jamie Green, who were partners at KKR. And in 2011, I jumped into a KKR portfolio company, GoDaddy, originally as the interim CEO, which was my old job. But I got hooked by what GoDaddy did in the world and the opportunities there, and stayed leading the company over the next 9 years until 2019. And what we did at GoDaddy was really take a company that had one successful act and really create a second act around building products beyond domain names, expanding the company around the world, taking a life cycle experience and really building it up to have customers triggered for what was the right next thing in their journey. And along the way, we took the company public. And during my time there, the business grew from 800 million of revenue and 100 million of cash flow to over 3 billion of revenue, $1 billion of cash flow. And the holders of the original investment made about 10 times their money. So that kind of took us through 2019. And since stepping away from GoDaddy, I've been advising other subscription businesses on growth at scale issues, how to build up their product portfolio, how to grow around the world, leadership issues. And one of the big topics was not only should we go public, but what should we do traditional IPOs and SPACs? And I found myself advising CEOs and boards often, you're not ready. But then for the companies that were ready, really think not about the event, but how to set yourself up for the next 3 years. And it was the process of advising all these companies that led me to TrueWind, because I do think that TrueWind is really the one of, if not the franchise that's really doing SPACs the right way. And it led me to join up with Adam, Jamie, and the team to spend some time and find a way to find a couple great companies to steward into the public markets.
That's fantastic. So let's dig into that a little bit in terms of what really differentiates TrueWind from other sponsors.
Yeah, and I think about it particularly from the lens of the CEOs and boards of companies and public investors. And I use the words doing it the right way, and I really do believe that. And there's a couple things that TrueWind does that I think are pretty different than a lot of other SPAC issuers. The first is TrueWind's really been a leader in alignment of interest, and everybody says alignment of interest almost like it's a buzzword. But TrueWind first was the first, if not one of the leading SPACs that really set up all of their promote and deferred it into out of the money options, right? So TrueWind makes money when the stock goes up. The second is it has one of the longest sponsor lockup periods. Again, it's about being an investment partner for the long term, not a quick trade. And in many instances, is both backstop capital, and there's a number of things that TrueWind does to make it effective in a pipe. So first of all, that alignment of interest for a CEO or for a public investor is really there. Second, and you hit this in your intro, is the track record of success. The two closed investments have been doing great. Open lending is probably the gold standard for really successful SPAC issuance over time. And so there's a great track record of stewarding great businesses into the public markets. And then finally, there's a real platform and resources, not just to get through the process, but to help a company for, the next couple years of being a public company. And, I think all those three things are meaningful and different versus, a lot of the other SPAC products.
Yeah, and I want to also go back to something you said initially about sort of framing the pros and cons for targets as they're thinking about dual tracking and sort of the consulting that you did previously. What advice do you have for companies that are thinking about these two options?
Yeah, first, think about going public 3 to 5 years from now, not the event, right? Because really the success is not going to be day one trading or week or month trading. It's about, boy, how and why do you want to be public? And are you able to really be successful in the public market? And to me, being ready isn't about back office, accounting, reporting, and all that stuff. It's about having a clear business model and value proposition for who you serve. And then being able to articulate a couple of both operating and financial metrics that let public investors guide where you are in that journey, and being able to be super clear about both what's working and not. And the great businesses that I think have been successful in the public markets are able to do that, not just have that in their business model, but really give public investors some milestones along the journey where, they can choose if that's a match and a fit. And I think so many, frankly, companies, CEOs, even private boards get so caught up in the event of we're going public that they forget about, boy, what's the ongoing dialogue in the public that'll help your business be successful. So being ready to me is all about being able to do those kinds of things. And that's what we're looking for at Truin, which are those great businesses that have a great value proposition. And then you can take that and turn it into a couple of metrics that public investors can follow along the journey.
Mm-hmm. Yeah. What do you think are the most important considerations that a target should be thinking about when evaluating a sponsor?
Well, first, I think it's credibility and track record. And probably that's 1A and 1B. The second is this institutionalized approach, which I think really comes along with alignment of interest. Is the sponsor putting both their promote economics and their lockup into not making the event successful, but making you and the company successful over a multi-year period? And I think that's truly where Truin shines, as well as an ability to add value, both in finding the right public investors, having the right dialogue with them, and really setting the company up to be successful again, not just in the event, but over a 3+ year period in the public markets. And, modestly, I think Truin's really set up to do that all the right way.
So you have a very unique perspective, having experienced both the public and the private sides of the market, both as a CEO and as a partner at KKR. Any sage advice?
Take a deep breath, take your time. And again, I'm talking to the CEOs of companies. Take your time and make sure that you're being clear about where you want your business to be 3 to 5 years from now. And match, again, those couple of metrics that are going to matter, and find both SPAC partners and really public investors that fit your business. I think so many companies get worked up in what's my trading valuation, and they sometimes try to sell or spin, when the best thing you can do around your business is articulate what you're doing while you're great in the world. What are the metrics around your business? And look, that'll fit with the right set of public investors. And if you're really good at what you do, you're going to be rewarded over time. So in some ways, it's don't worry about the immediate dynamics. Build an awesome business and be pretty clear about what works, what doesn't. And public investors, find a way to reward those who have great businesses that perform.
Thank you so much for your time, and best wishes for your continued success. And that's it for SPAC Chat. See you next time.